Hey everybody, welcome back to another video. Today we'll be going over how you can choose the best cash management account. And this video is going to be tailored for beginners who are just starting to look into CMAs. Now, the first thing to understand is that the Brown account could quietly cost you hundreds or thousands of dollars per year. So in this video, you're going to learn how to choose the right one and what to avoid so your money works smarter. If the video is helpful, please like it, subscribe, share it with somebody that you love. Check the links in the description for the products that I'll be covering today and download this presentation for free. I'm going to make it available for everybody that is watching this so you can read it and go over it at your own time. And I'm going to put those links here in the description. Now, let's first establish a baseline and go over what exactly a cash management account is so we all know what we are going for. Now, CMAs or cash management account blend the best of checking and savings without the traditional bank limitations. And there's a couple of reasons on how to make this happen. Now, the first thing to understand is that these CMAs are generally offered by brokerages and fintech companies. Now, this is, as of now, I haven't seen a bank yet that offers this type of account, and at least for now, right? Now, they do offer higher interest rates with flexible access. They are typically also backed by the FDIC or SIPC via partner banks. So the FDIC is insurance that protects your money in case the bank fails, and the SIPC is insurance that protects your money as well, your investment, if the broker fails. Now, this is a modern, smart way to hold your uninvested cash. And essentially, the way I like to look at this, it's like a checking account with high interest and investment features. That's really what a cash management account is. However, one thing to remember is that not all cash management accounts are created equal. So we have to know how to pick the right one. And so let's go over that. Now, I've been doing a lot of research into these cash management accounts, and the first one that I reviewed was a couple of days ago where I talked about a Fidelity cash management account. So it really got me thinking into what are the best features that we need to be looking for whenever we are considering a CMA. Now, there's 4 things that I've identified. If you identify even more, then let me know in the comment. I would love to know. And actually 5 now that I'm thinking about it. Now, number 1 for sure is the interest or yield, which needs to be competitive. And nowadays it's around 4%. So the key to remember here is that sometimes you will end up sacrificing your yield for going with a very reputable organization that you may be familiar with. I'm going to go over more of these details here in a second. But one thing to remember when it comes to yield is avoiding teaser rates and tricky terms, because sometimes some organizations offer you a teaser rate, which is a very high APY or interest for maybe a couple of days, a couple of weeks, sometimes a couple of months, and then they lower the interest rate. So I've seen that with high yield savings account a lot. If they're upfront about it, then that's great. Then you know what you're getting into. I just don't want you to get blindsided and then later on realizing, wait, I'm not earning X% APY anymore. Like, what happened? So just know what you're getting into. So make sure that you read the fine print. Now, it's also, of course, then the security feature, which comes with the FDIC or SIPC insurance. Make sure that that's clearly stated. And then also, of course, the access, how you can access your money, how fast it can be, and also any fees associated with the account. So let's go over each of these details here in a second, because you need to know how to spot red flags, and so you can pick your organization smartly. Now, first, let's cover the interest rate and why that's important, because the interest rate needs to be competitive, and just make sure that you also check the minimum balance rules. For example, some of the banks, that is because I've been doing a lot of research with high yield savings accounts, so I'm coming from that angle. So sometimes some organizations make you have a minimum balance in order to qualify for an interest rate. So for example, if the interest rate is 4%, they may tell you need to keep at least $10,000, $5,000, $1,000. So just make sure that you check the minimum balance rules on the account of your choice. Also, don't chase just promo rates that drop after a few days or weeks, because that just may end up giving you more headaches and more logistical nightmares, because later on you're going to try to switch to another one that is higher. So you're just always going to be switching, and you're essentially creating another job for yourself. And I know, like, time is money. So just make sure that you know what you're getting into, and then also know how you can maximize your relationship with one organization and stay with them longer. Also, a great rate is important, but stability and transparency matter more. And what about security, right? Like where most people assume they're protected, but that's not always the case. Some banks out there are not FDIC insured. Some brokers out there, I haven't seen one that is not SIPC insured yet. Now, let's go over the second important feature that I've identified with CMA, so cash management accounts, and that is, of course, security and where your money is actually sitting. Now, FDIC and SIPC are critical, but how your money is swept matters just as much. So swept, right? But when I mean swept, essentially means where your money is allocated. And here's where I'm going to go into what this means. Now, the FDIC by default, or they cover up to $250,000 per deposit or per bank. Now, in previous videos, when I talked about high yield savings accounts, I learned that they are ways that you can increase your FDIC insurance up to 1.25 million when you start dealing with revocable trusts and you start adding beneficiaries to your account and payable on death. So that's a little bit of a process that is a little bit more complicated, but you need to know to make sure that your money ends up with your loved ones in case something happens to the bank or maybe you die. And so if something happens to the bank, then of course the FDIC insurance kicks in and it gives you your money back. Now, it's per account per depositor. So if you have two joint accounts, if you have two people in the joint account, then you would qualify for 500K. If you have three people owning the account, it will be 750. So like I said, there are ways that you can increase this FDIC insurance. Now, the second bullet that I have here is the SIPC. That's the Securities Investor Protection Corporation. And quite honestly, this is something that I just learned when I started reviewing the cash management account for Fidelity. So this protects your money, $500,000 per customer, including a maximum of $200,000 cash if a member broker goes bankrupt or fails, right? So for example, this is how it works. Let's say that you have $10,000 sitting with, let's just say Fidelity, because I gave this example a couple of days ago. So let's say that you have $10,000 with Fidelity in your money market fund account. If Fidelity fails, then you will be eligible to recoup your money for $10,000. That is assuming, of course, that your money did not shrink because the money that they keep in your money market fund is invested, but it's very safe. So I'm just giving you here an example of how this works. Now, some accounts use sweep programs across multiple banks for extended coverage. Essentially, what this means is what they do, let's say a broker or a bank acts as a hub, and then the bank distributes your money amongst other FDIC insured banks, and then they are able to provide you with a high FDIC insurance. For example, Fidelity partners with a bunch of banks to provide you FDIC insurance. SoFi also gives you FDIC insurance up to $2 million. Wealthfront gives you FDIC insurance up to $8 million. And that exactly explains how they can give you that much more when the FDIC itself only covers your money up to $250,000. So I hope that this explanation helps you. I'm trying to make this as simple as possible so you can understand even for beginners, because this is something that I wish I knew. Now, so make sure that you always read the fine print, know who insures your money and where it's held, what bank is holding your money. I think that's important to know because that's going to give you a warm and fuzzy feeling. Okay, I know exactly where my money is held, so that way you can sleep better at night. So security is one thing, but what happens when you actually need your money? And this is exactly what we're going to get into here when it comes to access. How fast can you get your money? Now, this is important, right? Because liquidity, when we have our cash management accounts, if you're considering this account, then most likely you are considering this as an option to either a checking account or maybe a high yield savings account. And you obviously want to access your money fast. So how you can do this? So interest is great, but a slow access in an emergency could be dangerous, right? So let's say that your car breaks down or your pet, you need cash somehow, wink, wink. And so you need to make sure that you access your money. So ideal accounts offer instant same-day transfers. Now, what I've seen is that some organizations out there like Fidelity, this is not a video for Fidelity, by the way. This is just one that comes to mind because I just researched it, so it's kind of like top of mind. So Fidelity offers wire transfers that are free. And during regular business hours, wire transfers are essentially a fast transfer of your money from bank to bank. Now, ATMs are always also easy ways to access your money more quickly. And Some brokers out there don't give you ATM cards. Fidelity does give an ATM card. I'm going to give more into details here comparing Fidelity to other options. But ATMs, cash management account providers like Wealthfront, Fidelity, I think also Schwab, they offer ATM access. So these are two ways money, wire transfers and ATMs are ways to access your money quickly. Otherwise, of course, you can do the regular transfer, which takes 1 to 2 business days to your external bank. Maybe you have a credit union or an account with Chase, whatever the case may be. So just make sure that you look for linked accounts, debit cards, and mobile deposit features. We're going to go over that here more in a second. And then 3 to 5 business days delays with some fintech or brokerage platforms. Now, I saw some people when I made that video about Fidelity Cash Management account that were complaining how Fidelity sometimes takes forever to get your money. So, for example, if you're transferring from a third party to your Fidelity account, sometimes it takes longer than 5 days. Like I saw one customer complaining how it takes about like either 2 weeks or even 3 weeks sometimes. Like I said, just make sure that you know exactly what you're getting into, so that way you can adjust your expectations. And if you are okay with waiting that long, so that's up to you, right? But there are ways, again, that you can transfer your money out, like a wire transfer or using the ATM if you need money right away. Now, if it takes too long to access, of course, it defeats the purpose of liquidity. Now, let's talk about fees, because you need to know why they can be a deal breaker. Now, before we get there, of course, this is one of the X factors that I like to talk about when I review or when I research these types of accounts. At the end of the day, the warm and fuzzy feeling of confidence, trust, and familiarity that beats any interest, right? Like I said earlier, sometimes you sacrifice interest because you want to bank, you want to be in business with somebody that you already know and that you trust. And so if that's the case, then so be it. Again, I just want you to be aware of your options. If you don't feel comfortable, it may not be for you. So one thing that I learned about life is that if it's not a hell yeah, then it's a no. Now, let's talk about fees, because don't pay to access your own money. Nowadays, there's no reason to pay to save your money or to park it somewhere. Avoid monthly maintenance fees, inactivity fees, or transfer charges. Make sure that there are no minimum balance penalties, as I mentioned previously. Also, fee-free ATMs and debit cards are a bonus. Now, as I mentioned, some brokers out there give you the fee-free ATMs, and we're going to go into the details here in a second. I know that you cannot wait. I can't wait either. We're about to get there. Just make sure to remember the best cash management account charge nothing to store and move your money. So now that you know what to look for, now that we went over the basics, if you have any others, by the way, and you want to help people out, just make sure that you put them in the link in the comments below. I would love to learn so I can share more wisdom, wealth with other customers who are beginning to just look into these as well. So let me show you a few options that you can now start considering. So here are the features that I've identified. Of course, we got the interest rate, account fees, ATM, access, and then all the other regular checking features, right? Like checking features, like as I mentioned previously, a CMA is kind of like a checking account with high interest, and also investment features. So all of these accounts, of course, offer investment features. So just make sure that you understand that and you know that that's a default with these accounts. And the ability that you can just buy stocks or buy mutual funds or contribute to your Roth IRA or any other type of investment account that you have very quickly, right? That's one of the main advantages of cash management accounts. So the interest rate, of course, with Fidelity, you have the highest one, which is 3.96 nowadays. That's their government money market fund that is SIPC insured, as I mentioned previously. And then they also have the FDIC insured, which is 2.21%. Now, you might be wondering why these two are different. Now, the main reason is because the FDIC is 100% risk-free. With the government money market fund, there is a little bit of risk, but it's really not that much. Like these are funds that are invested in government-backed securities. So the chance of them failing or quote unquote breaking the buck and reducing in value, it's very low. But it's still a little bit higher risk. So that's my estimation why Fidelity makes this more of a quote-unquote premium interest rate, right? Now, Wealthfront and Public are two other options that I looked into. Now, Wealthfront offers 4.0% APY. Now, I talked about Wealthfront here on the channel as well from the angle of a high-yield savings account. Now, I'm approaching it from a cash management account, which is essentially what it is. Sometimes they advertise it as a high-yield savings account, but it's just a cash management account, right? So public, it's a 4.1%. Now, the really cool thing with Wealthfront is how you can also earn an extra 0.5% if you get a referral link. Somebody refers you to Wealthfront. I don't have a link that you can use, but you can find one online. I'm sure like there are many people who share the links online and hoping somebody uses them. So maybe you can be one of those. And I'm not responsible for what you click on when you go on your online quest. Now, when it comes to account fees, none of these organizations, as I mentioned, they don't have any fees to use this type of account. You do have a minimum balance to open with Wealthfront, which is $1. I think we can all afford $1 when it comes to opening these CMAs. Okay. Now, when it comes to ATM access, now this is where things start getting a little bit juicier and more beneficial because with Fidelity, you get unlimited global ATM fee reimbursement. So any ATM that you use, hey, here's your money back. That's what Fidelity suggests. And then with Wealthfront, you get 19,000 no-fee ATMs and also 2 out-of-network fee reimbursements up to $7.50 each, right? Each reimbursement. So that's really how Wealthfront works. And then Public has no offered ATM access. Now, one thing that I noticed with Public is the only thing they offer is essentially a bank transfer. That's the only way that you can access your money. And that's just really just like a high interest rate. It's a savings account. That's really the way I see Public. You can buy investments with it. You can invest your money, but it's essentially the way I see it. Not so much a checking account with investing features, but it's almost like a high yield savings account with investing features because they don't have debit card, they don't have bill pay, they don't have check features, they don't have mobile deposit or direct deposit access, unlike Wealthfront and Fidelity. Now, FDIC and SIPC Insure, all of them are insured in one way or another, and I'll put the numbers there. Now, if you are a customer of any of these organizations and you want to provide your insight, I would love to know. I would love to learn. Please leave them in the comments. Also, I would love to know your take. So which of these organizations is for you? At the end of the day, of course, it's going to be depending on what you are looking for, which one gives you the warm and fuzzy feeling. And if you want to learn more about how to maximize your money, the truth is that cash management accounts are not the best ones when it comes to maximizing your passive income and your growth in the interest rate. That's why high yield savings accounts, top high yield savings accounts are still the leaders when it comes to providing you with the highest interest for your money with no risk because they are FDIC insured. So I'm actually going to leave a few links in the description if you want to learn more about top high yield savings accounts. And if you want to learn more about high yield savings accounts, I put together a free guide that can help you get started on what to look for when it comes to HISAs or high yield saves. If you like this video, please give it a like, consider subscribing to the channel. Thank you for being here. Peace.